crypto across the board has been flying following yesterday's FOMC meeting, where surprisingly Jerome Powell, the Fed chairman, came out rather dovish in the post-conference meeting. And the result of that, as you can see, is a massive green wave of crypto bubbles across the board over here. Most altcoins pumped, Bitcoin pumped. Now you're probably wondering, what are the next levels that you should be focused on? And is there going to be a pullback from the zone? Is there going to be some sort of profit taking? Well, if you do take a look at the hourly chart, at least some of the coins on the altcoin list are starting to pull back. I'm going to cover all the levels that you need without further ado. Let's get straight into it. And I want to start off with this tweet over here from Joe. And he says that the Fed addressed slowing inflation in its statement for the very first time this cycle. It also signaled an upcoming end to hikes with the word extent. Slowing inflation is consensus. The Fed is getting exactly what it wants, so its focus has shifted to achieving a soft landing. And for those of you who have been watching the show religiously, you'll know that I had warned that there is a possibility that the market is truly reversing, and price action always seems to lead these main news events before they actually take place. And I mean, call this what you will, but it seems like a sort of a pseudo pivot, which is what the Fed is alluding to over here. And here he says Powell addressed slowing inflation, that we're within striking distance of the terminal rate, and that if they over tighten, they have the tools. That is a very key word. They have the tools to fix it. The market is interpreting it dovishly, almost like it was a pseudo pivot. Expectations for Fed funds rate is falling off of a cliff, and there you can see it. So there's the expectations, absolute massive drop off in the expectations of the Fed funds rate over there, which take it as you will, but that's kind of a pseudo pivot, what the Fed alluded to. And we know that the market is forward looking by 3 to 6 months, which means that there is a possibility that this rally will continue. So I'm going to give you the levels that you need to watch out for. And I would still be treating it as a bear market rally with the possibility of course, merging into a full-blown bull market at a later stage. But for the time being, continue to remain cautiously bullish. But when it comes to trading, the market doesn't actually care if you're cautiously bullish or if you're cautiously bearish. You only have one of two buttons that you can click, and that is the buy or sell button. Everything outside of that is irrelevant. So if you look at 𝗕𝗬𝗕𝗬, he says, people de-risked heavily coming into this event. I watched spot ETH get aggressively sold for multiple days into this. There's a lot of dry powder that needs to flow back in now. So essentially outlining the possibility of FOMO jumping back into the market, and that leads to that next big spike up. We do know that we're coming into major resistance though, so that is something that you do need to be careful of. And in all fairness, I mean, I can say straight up that I was one of those people that going into the FOMC meeting is a day that I typically would not want to take any trades on. I would tighten up stop losses as well. But yesterday I did give the trade, and I'll cover it over here. I did say to you that as long as price is holding above this trend line, you have wick to wick to wick to wick. That is your invalidation. Price held above that. If you were holding longs, you should have pretty much been in the money on those trades. So one guy that's not doing too well is Cassandra from The Big Short. Yesterday I showed you, he said sell, and if you go look at his account today, he's deleted his Twitter account. So I don't know if he got absolutely wrecked or if he's just being dramatic, but some people definitely have not taken too well to the pump which has taken place as well in the stock market, and I will cover that in just a moment. If you look over here at the monthly returns of Bitcoin over the previous years, you can see that this is one of the biggest Januaries that we've had, with 38.23% increase. Second to that is going to be the one that's ahead of that is 2013, where we had 44% increase, and then the following month was 61%. Now, because the market cycle is so much bigger, because there is still some macro headwinds, and the liquidity, as I showed you on that tweet yesterday, is actually at pre-FTX levels, so very low liquidity in the market. I'm not so sure that we're going to see a follow-on in the same way that we saw in 2013, but trends do tend to continue, which means that there is a possibility of further upside. And when you take a look at the monthly chart, some new things are happening. First, We have outlined the RSI. We are looking for a reclaim of that 43.53 level on the monthly chart, which has happened. You can see right now the RSI is coming directly into the yellow line, which is the moving average. A reclaim of that in the same way that we saw back in 2019 as well as in 2015 would signify the start of possibly a much bigger run. And then I also wanted to put on the RSI stochastic over here. That has also started to cross back up completely. So you do have the shorter term moving average above the longer term one. So the blue above the orange. And that generally would create enough momentum to hopefully send this at least up to that $30,000 level, which I'm going to show you on the Wyckoff accumulation chart in just a moment. But the question is, do we have a proper pullback from this level first? Because overhead, we have a lot of resistance. We do have the 200 exponential moving average, which is currently coming up at $25,000, which matches up as well, if you take that off, with the horizontal levels, which comes from that wick in May, on the 9th of May. And then this is going to act as a resistance level. When you also throw on the moving averages, you have that coming in as an additional level of confluence. That is the 50 and the 200 day or 200 the 50 and the 200 moving average, but on a weekly chart. You can backtest this. These are very important moving averages, especially the 200. There is a possibility that we rally directly into that zone and have an initial rejection from that level. If that rejection takes place, these things take time to play out, guys. By the way, this takes time to play out, hence the drawing that I've given. If you look on a weekly chart at the angles, if you're going to see a pullback into this zone, the levels remain the same. It's around that $20,000 to $22,000 zone. That is where you would expect the bulls to get somewhat tested, because bears would get quite euphoric. If you start to see this, if price action comes into this and rejects from that level, even once you get here, bears will be celebrating. Bulls will start to question their positions and say, well, this is a macro lower high, and we've rejected from such a key level, that being the 200 moving average, and therefore Bitcoin's in big trouble and we're going to new lows. And this is where I would start to look to really position myself for major longs across the board using spot positions. So keep that in mind. The Wyckoff accumulation chart, which I did on the 27th of December last year, that show is still currently in play. And it's got the same levels of interest. You have the wicks on the left-hand side over here, because essentially price action is still just range bound. So I'm going to very quickly show you that range. You have your range that's pretty much like this. Call this level over here was a deviation outside of the range. We broke back in, and now this is still range bound. So I've mentioned to you what you may see is a deviation above the top of that range, and then you'll come back into the range, and then we can take it from there, looking for the next trading play. But ultimately, longer term, the target remains this order block, which led to the initial breakdown. That happened back in May and leading into June, when we started to have the major breakdown. I still think that level will get tested. And the question is that going to be a rejection from that zone, or are we just going to smash through? So I think this level in the high time frame sense will act as a magnet. That level is 29,000 to 32,000. I still think that level's in play. It's just a question of how deep do we pull back, or do we just go straight through into that zone? So keep your eyes on that. And Andrew Kang also outlined over here, cash from the sidelines are starting to be deployed. Expect the trend to continue. So a lot of people are noticing that sideline money starting to FOMO into the market. Now, when you take a look at the stock market, this is going to be a major driver of what crypto does. And a lot of the top names in the space, I won't mention them, but a lot of the top names have been caught completely off guard with this, calling for lower prices. I told you guys to pivot your mindset. Forget about this trend line over here for the time being. Start to focus on the ranges, which is the orange lines over here. You can see that we've broken through the mid-range. We broke the downtrending trend line with the low highs. We officially have a daily close above this side over here. So let me grab the arrow. So these are all lower highs, lower high, lower high, lower high. Boom. There. We now officially have a daily closing candle, and I'll zoom in. a daily closing candle which has closed above these levels. That is something positive to look at least in the short to medium time frame. Now, you'll notice that the 0.75 level has been tagged. So we have the range, the top of the range, the mid-range, the low range. You have 25% through the range, and that is the 75% level through the range. We're currently heading into that area. This creates a trade opportunity for the short-term traders. I want to emphasize that for the short-term traders, I took this trade myself. It would be a short opportunity with your stop loss literally above yesterday's high. If price is unable to get back above that level and it holds under the 0.75, then it's possible that we're going to pull back all the way down to the mid-range. So here is the trade setup that I took. It's a key monthly level as well, by the way, the same level that we wicked through. We failed to close any monthly candles above this zone, which is 4,142. So that creates a short opportunity, looking for a pullback with your TP1 back into the trend line over there, and TP2 would be all the way at the bottom, coming in at 37.85. If you zoom in and you take a screenshot, you can get the trade set up there as well. Look at the numbers on the right. So 41.70 and 63 cents is the stop loss. The entry is pretty much right where we are now, and your final take profit is at 37.84. If you do want to take that trade, check out PrimeXBT. You can actually trade Forex, crypto, and commodities on this exchange over here. So the S&P 500 is an option. There is a link in the description below. If you do use the link, my link below, you'll get up to $7,000 in sign-up bonuses. Just make sure that you put in the promo code Kyledoops. I want to touch on the copy traders as well. So you'll notice currently some of them are red. The reason being is because I just closed out the positions yesterday. Remember, I initially had one position open, and then I joined with another 9 copy traders. So here's been the net result of that. If you take a look, they've done pretty well. Only the one guy that was doing the best, he was in a short king of price action. I'd set a stop loss, and this, you'll notice there on the right-hand side, the stop loss got hit, so I wanted to secure at least 5% profit. So that got taken. The others were up significantly, 20% up on the highest one, 20.9% to be precise. I closed all those positions out, so I took the profit off the table. I left the initial entries in. So the initials are still running. These guys don't trade just crypto. So if you do want to kind of hedge your positions or your portfolio and you want to have exposure to other markets, they're trading mostly currencies, S&P 500 and other commodities like gold. Check it out. It's really so far been a worthwhile experiment. I'll keep you guys up to date on this. If they do well for a week or two, I'll start to scale up the funds. At the moment, I'm about $600 out of a $3,000 account entered. Okay, let's move on. So link is in the description there. 𝗕𝗬𝗕𝗬 is in a very interesting place. So the dollar I'm on an 8-hour chart now, but you will notice that the level got tagged over here, the liquidity zone. Now, I'll make these lines a bit bigger. You can see it's creating a bit of a falling wedge pattern. So let's increase the size on that. So currently it's on a falling wedge pattern over here, and the breakout levels would meet up with the other zones that I'd previously outlined, looking up to about 103 to 103.8. So if that level does get tagged. Now, what you need to watch is to see how the next, I would say, 2 to 3 days play out. This will give you an indication. If you see this get back in above that liquidity zone like that and hold that level, then you know with high probability you're probably going to break this wedge, and then you're moving up to that zone first and probably the next level. So as a percentage move on the dollar from current levels, let's see where that would take you. That would currently be 2.6% and 3.8%. So almost a 4% move. It sounds like a little when you deal with crypto, but that will have a big impact on the crypto price. So again, start to tighten your stops. Just manage your risk when you're in your longs. I do think that the long side is the preferred side to be on, at least for a little bit more before potential pullback. And usually what you find after these economic events is that the pump happens, and then usually the market takes about a day or two. So over Thursday and Friday, today and tomorrow, the market will digest what happened with the price action, and then you might get a small correction off of that pump. Okay, total 3. Let's first touch on Bitcoin dominance. Bitcoin dominance is still holding above the mid-range over here. So I'll zoom in, still holding above the mid-range. I told you guys, though, if it does start to fall back below the mid-range and it heads back down towards the range, though, that would probably allow for total 3 to have a proper breakout. And we were looking for a breakout above this zone over here, which is the diagonal. You can literally just take it from the previous high, lower high, lower high. We're looking for a break above that level at the very least, and then we could start to target towards the mid-range, meaning upside potential for the altcoins. In percentage terms, you would be looking at from current level to mid-range, that's about a 6.2% move. To the top of the range, about 20%. That means that altcoins still have a potential to rally hard. Trap levels. This is very, very important. These are going to be the trap levels. Now, the level that I've taken, if you go on the daily and you zoom all the way out, just see, is that loading? Where is this? Okay, there we go. So if you zoom all the way out, 2017 highs, that's going to be a key pivotal level. You don't want to see price action come back below that. So keep your eye on the dotted line. I'm going to show you in relation to current price action where that dotted line is. And then also look to the bottom. This was the ultimate bear market target that I had for the bottom of the bear market. And that's based off of a usual 85 to 95% dip from top to bottom all the way into that zone. There you go, 85%. That's usually how the market cycles work. And you can see we haven't quite got there. But that's okay. This can still be an aggressive bear market rally that can reach much higher prices. You could even see total 3 potentially going up to 592 billion, which is this underside resistance over here. And even then, it could still be a bear market rally. But we don't want to miss out on that. Of course, I'd want to participate in longs using that. Now, I told you, keep your eye on the dashed line or the dotted line over there, daily chart. If you see this happen, if you see Bitcoin dominance, respect this level, the mid-range, and bounce from here. So I told you, you might see it hold onto this zone. If you see it hold on around here and bounce from this level towards range high, what will most likely happen is that would coincide with total 3 breaking back into this range, a break under the dashed or dotted line, and holding underneath that level means you're probably going to go much, much lower. And this would be a very, very big bull trap. So that doesn't mean that you should not go long on anything. It just means that you should manage your risk when playing that upside in case of an event like that. One easy way to manage your risk, and it's standing out like a sore thumb over here, is pretty much these daily candles over here. If you have your stops underneath those daily candles, you're probably going to be okay. Of course, this is total 3. There's no index to trade total 3, so you're going to have to look in relation to whichever altcoin it is that you want to trade. Take a look at that altcoin, manage your risk over there. No daily candle closes underneath that zone. All right. Okay, let's move this up now because we have a new level on the fib. Let's just put that onto the top there. Okay, if this were confirmed as a local top, same thing remains as yesterday. Your next level that you're going to be watching is the 0.382 level, which lines up with the liquidity zone over here. So looking at about $20,100 to $22,000 as a potential area of support on a pullback. So that's on your daily chart. On the 4-hour chart, you can see the clearly defined range that we remain within. So exactly what I showed you on the high time frame. Pretty simple. This is the main range over here. We had the deviation below the range, recapture into the range. We then have pretty much a bull flag into a bull flag into what could possibly be another bull flag. And if you see a consolidation up like that, look for weakness. You might have another spike to get a deviation in the same way that we saw over there. And this has been the same plan that I've been looking at for a long time with you guys. If you do see something like that, you're watching for a deviation, possibly even as high as that $30,000 zone. And then potentially price would just come back into the range and accumulate for a little bit longer. So that's what I'm watching in the medium time frame. Short time frame over here, the levels that I'm watching, if you put this onto, let's just zoom out, 24,700 to 25,500. This is the area where I expect to get tagged. and then at least a temporary pullback from that zone. We got close yesterday, lines up with the 200 exponential moving average. For those who are panicking, I just want to mention, I've said this before, when you do get the golden cross, if you've missed out on this move, when you do get this golden cross over here and price moves aggressively up, eventually it does come back into the 200 exponential moving average, at least for a test. Now, you may have to be very, very patient and wait for a long period of time. You could wait possibly even 6 weeks for something like that to actually take place. I don't mean 6 weeks from here. I mean potentially another 4 to 6 weeks before you eventually see price action pull back into that moving average. Remember, this is rising with each passing day. So in 6 weeks' time, that moving average may be pretty much exactly where price is right now. And that's why I've said any opportunity that you can find to manage your risk on an altcoin that hasn't taken off yet and you can time your long entry, it's really worth doing. Consider doing that. Fred is here again pulling faces at the studio. I think we should dox Fred sometime soon. He's got away with murder for too long now. Okay, guys, I think that brings us to the end. Pretty quick show. Please do me a massive favor. Give the video a like, hit the bell notification, and subscribe to the channel. Also, the Rolex competition is still in play. Nobody's claimed the Rolex yet. It's just a matter of time before they will. Yesterday, I received questions of people that said, oh, I saw that Rand was giving it away to user ID numbers that begin with the number 3 and my number's 8. Don't worry, if you have registered with any link from Crypto Banter, you are on that list. You'll probably choose from a different section soon. The links are below. Sign up using any one of these links, Bybit or BitGet, and you'll be entered into that competition. Take one trade. Each trade is an entry. And I think that's it, guys. That brings me to the end. Let's see how today plays out. Thank you all for watching. I appreciate each and every one of you, and I will see you all on tomorrow's show. Cheers for now.